Welcome to the podcast about venture capital, where investors and founders alike can learn how VCs make decisions and reach conviction. Your host is Nick Moran, and this is The Full Ratchet.
Welcome back for another edition of Investor Stories. On this special segment, the experts describe the most important lesson that they've learned and how that has changed the way they invest. This is the special segment called Lessons Learned. On today's special segment, we have Henrique Dubugras of Brex. Henrique, can you tell us a story highlighting a critical lesson that has changed the way you approach leadership at Brex?
Yeah, so probably the most important lesson that I learned in leadership, and it kind of goes through our first value, is the importance of dreaming big in an organization, in which, a lot of people, they want to try to be realists all the time. And I think that, at least for us, the most successful things we had in leadership was just inspiring everyone to dream big in every little thing that they do. So people just try and they go for a lot bigger outcomes than we have in the past. They try to hire someone that's harder to hire. They, try to do something that's harder to do. And just having this really strong dream big mentality has helped us a lot.
On today's special segment, we have Ryan Gembala of Pathbreaker. Ryan, can you tell us a story highlighting a critical lesson that has changed the way you invest?
Yeah, I think the lesson, having been an operator, a VC, an acquirer, seeing that there's no one profile that equates to success in venture style outcomes. Just because a company has a hard time fundraising and is weeks away from running out of money doesn't mean it won't be your fund maker. Strange configurations of founders that might at first glance be risky. Husband-wife teams, brothers. VMware was a husband-wife team, $60 billion market cap company.
Yeah.
Superhuman has two brothers. Fathom Computing has two brothers. I have a single person founder, a sole founder company that just raised a massive Series A in robotics. Seeing that massive outcomes look differently almost 100% of the time from each other, that's been a lesson that, I try to keep in mind to make sure I'm not trying to pattern match to the thing that worked before. Really evaluating each individual startup for what it is.
On today's special segment, we have Grace Isford of Canvas Ventures. Grace, can you tell us a story highlighting a critical lesson that has changed the way you invest?
Yeah, I have two, but they both relate to the same thing, which is that relationships, like soft skills and EQ or emotional intelligence, really matter in every job, but especially I think in venture investing. So one is just being really thoughtful. Once an investor had actually asked me if I wanted an introduction to this company, and our firm wasn't interested at the time, so I kind of wrote a cursory, kind of quick pass note back. And in hindsight, I don't think that was really the right approach. I should have been kind of more thoughtful and always be as upfront and authentic as you can be with others, and just think deeply about their perspective, right? You want to continue to foster that relationship for the future. And so being mindful, again, of all relationships. The second was just the importance of following through. This one actually happened to me, but, an investor asking for an introduction to one of our companies, really, really excited, really interested, excited to move forward. And then it turns out after I facilitated the introduction, there was no longer any interest there. So not really following through, maybe lose a little bit of respect and trust with that investor. And so I hold myself to the same standard, right? You want to follow through and just be honest and say, look, we're not going to make it at this time, rather than ask for something and then not follow through on it.
On today's special segment, we have Scott Kupor of Andreessen Horowitz. Scott, can you tell us a story highlighting a critical lesson that has changed the way you invest?
Yeah, I think the big thing that we've learned over the years is, as that market size is really one of these really, really difficult things to do. And that I think you're more likely to err on the side of underestimating market size than overestimating market size. And, we certainly, when we first looked at Lyft, for example, or Airbnb, it took us a while to get our heads around what the market size opportunity is. And, we had the same way. We have a company called Okta that you may know in the enterprise software space that's gone on to be a public company and done very well. And we also kind of at the outset, kind of really had to spend a lot of time thinking about, okay, like how big could the market size be for what they're doing? And there's no question we way underestimated. Luckily, it was still big enough for us to make the smart decision to invest in them. But I think we way underestimated the opportunity. And so we talk a lot about trying to not kind of outsmart ourselves too much on market size and at least formulate enough theory on how technology can dramatically expand what the current market can look like, and not make too many decisions on that basis unless we are highly confident that there's just no way that this thing could ultimately sustain a standalone profitable business. So I'd say that's probably our biggest lesson that we try to incorporate into our thinking, is to make sure we're not too myopic in our thinking there, because I think it can lead you down some poor paths and get you more to those risks of or mistakes of omission versus commission.
That will conclude this installment of Investor Stories. If you're enjoying the program and would like to see it continue, take a moment and leave a 5-star review in iTunes. Also, if you'd like updates on new content from TFR, as well as the top 10 VC articles every week, go to fullratchet.net and sign up for the newsletter. Okay, that will wrap things up for today. Until next time, over-prepare, choose carefully, and invest confidently. Thanks for joining me.